Imagine waking up tomorrow morning and discovering that you now control the World Bank. At first, you might think you've become the richest person on earth. After all, countries come to your organization asking for billions of dollars. Governments negotiate with you. Major infrastructure projects depend on your funding. Roads, bridges, hospitals, schools, power plants, water systems. Entire nations look to your institution for financial support. It sounds like owning the world's biggest bank. But here's the surprising truth. The World Bank isn't a commercial bank. It doesn't exist to maximize profits. It doesn't issue credit cards. It doesn't compete for your savings account. Instead, it plays a completely different role. Its purpose is to finance development, to help countries reduce poverty, improve infrastructure, strengthen education, expand healthcare, and create long-term economic growth. So if the goal isn't simply making money, how does the World Bank actually work? And why has it become one of the most influential financial institutions in modern history? The answer reveals a completely different kind of economics. 1. A bank that doesn't work like other banks. Think about your local bank. You deposit money. The bank lends part of that money to businesses and individuals. It earns interest on those loans. That's the traditional banking model. The World Bank operates very differently. Instead of serving individual customers, it primarily works with governments and public institutions. Its mission isn't to finance shopping malls or private homes. It's to finance development. Imagine a developing country that wants to build thousands of kilometers of roads, modernize its electrical grid, expand access to clean drinking water, improve schools, or strengthen hospitals. These projects often require billions of dollars. Many governments cannot finance them alone. That's where the World Bank can step in. It provides financing, technical expertise, research, and development support designed to help countries build stronger economies over the long term. Unlike private lenders focused mainly on short-term profits, the World Bank often supports projects whose greatest returns may take decades to appear. Better education, healthier populations, modern infrastructure, more productive businesses. These investments don't simply improve individual communities, they can strengthen entire national economies. That's why economists often describe infrastructure as the foundation of economic growth. 2. Where the money comes from. If you owned the World Bank, one of the first questions people would ask is simple. Where do you get all this money? The answer surprises many people. The World Bank doesn't rely on one giant vault filled with cash. Instead, it raises funds through global financial markets and the financial support of its member countries. Because it has strong financial backing and an established reputation, it can borrow money at relatively favorable interest rates compared to many developing nations. It then uses those resources to help finance eligible development projects. This creates an important economic advantage. Countries that might otherwise struggle to obtain affordable long-term financing gain access to capital for projects that can improve economic growth over many years. But financing is only one part of the organization's work. The World Bank also provides economic research, policy advice, technical expertise, project evaluation, risk analysis, development planning. In many cases, knowledge becomes just as valuable as funding. A poorly planned project can waste billions. A well-designed project can transform an entire region. That is why economists, engineers, financial specialists, environmental experts, and development professionals often work together within the organization. 3. Why the World Bank matters to the global economy. If you owned the World Bank, your greatest asset wouldn't be money, it would be influence. Unlike commercial banks, the World Bank isn't designed to maximize quarterly profits. Its purpose is to create long-term economic development. Its success is measured by impact. Did a new highway reduce transportation costs for businesses? Did a hydroelectric dam provide reliable electricity for millions of people? Did investments in healthcare reduce disease and improve productivity? Did new schools give children better opportunities for the future? These are the kinds of projects that can reshape an economy for decades. The World Bank also plays a critical role during global crises, natural disasters, economic recessions, food shortages, health emergencies. When countries face unexpected challenges, they often require financial support and technical expertise to rebuild and recover. Beyond financing, the World Bank has become one of the world's largest sources of economic research. 4. The challenges of financing development. Owning the World Bank would mean making some of the most complex financial decisions in the world. Every project carries risk. A road project may exceed its budget. A power plant may face political opposition. An education program may take years before measurable results appear. Unlike private investments, focused mainly on financial returns, development projects must balance economic, environmental, and social considerations at the same time. Political stability is another major challenge. Governments change, policies evolve, economic priorities shift. Long-term projects must continue delivering value despite changing political environments. Climate change has also become an increasingly important issue. Many developing countries face rising risks from floods, droughts, storms, and other environmental challenges. Infrastructure financed today must remain resilient for decades into the future. Debt sustainability is another critical concern. Countries need financing to grow, but borrowing beyond their ability to repay can create long-term financial problems. The World Bank must carefully evaluate projects to ensure that investments support sustainable development rather than increasing financial vulnerability. Global economic conditions add another layer of complexity. Inflation, currency fluctuations, interest rates, commodity prices, international trade. All of these factors influence how countries grow and how development projects perform. If you owned the World Bank, you wouldn't be running the world's largest commercial bank. You'd oversee one of the most influential development institutions ever created. Every successful infrastructure project could strengthen an economy. Every investment in education could improve future generations. Every healthcare initiative could raise productivity and quality of life. The World Bank's greatest achievement isn't simply providing financing, it's helping countries build the foundations for sustainable economic growth. That's the true economics behind one of the world's most important financial institutions, where the ultimate goal isn't maximizing profits, but expanding opportunity for millions of people around the globe.